Okay, good afternoon, ladies and gentlemen, and welcome to the next installment in the Admiral Markets Trading Spotlight webinar series. And here we are today to talk about a post-US election update. So, I'm saying this here at the in the middle of the way through December. There's going to be things changing, even actually as we speak, because of the nature of the day. But nevertheless, there is still plenty for us to actually have a chat about with regarding to what happened in that US election. As always, I'm fascinated to hear what your own thoughts and experience are on something like such a fascinating subject as the US elections. Maybe you were surprised what happened. Maybe you saw what was happening. Maybe you think there's going to be certain types of behavior within markets that we can expect from what has unfolded. If you have that, it would be great to hear from you. If you're here with us, joining us today, put it in the chat box. Okay, it'd be great to sort of hear people's comments. Or if you're watching this later on demand on the Admiral Market YouTube channel, then yeah, please give us a like, give us a pop in the comments box if you've got questions or thoughts about it, or maybe you've got particular subjects you'd like us to have a look at in the future. We'd be very, very happy to take that on board and build that into our plan for 2021. So what are we going to talk about today? We'll talk a little bit about who the winners and losers were, not just politically, but also in terms of the grander scheme, in terms of markets. We are traders after all. That's what we're interested in. We'll have a little chat about how did the global markets react. Okay, were there any particular signals beforehand that gave us an idea of what might actually happen? How did markets react as the news unfolded? Okay, is there anything we can learn from that for future trading ideas? And also, are there any new trends emerging that offer us opportunity? There is always markets are always changing. Okay, markets are always moving, and it's about being able to recognize, are there particular threats, but also are there opportunities from that actually give us an opportunity to engage with the markets. So for those of you who don't know me, my name's Paul. Okay, I've traded for many years. I primarily sort of like to focus on trading FX indices and commodities. With my kind of longer term trending, I'm a trend trader, and my shorter intraday trader tend to be a reversion, or a reversal trader. And here we are, Admiral Markets, okay, brokerage that provide a wide range of financial instruments, okay, with a real global sort of reach, regulated in many wide regulatory environments there, providing competitive spreads on the most popular trading products and allowing you to engage with markets using the MT4 or MT5 platform. And if you have any particular questions, get in touch with your account representative and they'll be very happy to help you. So let's talk about the US election, okay, ladies and gentlemen. So, as I said, tell us, what did you think? All right, what did you actually think? Did it unfold as the way you thought it had? Did the markets give you a hint about what might actually look to happen? How have you seen the kind of behavior, post that election? Okay, in terms of both, within the US, within globally, and maybe even the impact that it might have on the country that you are, you're watching this from. I appreciate that, I have a wide range of not only experience, okay, but also global locations who tap in to watch the Trading Spotlight webinars. Maybe you've got an interesting view that's different from my own. Okay, I don't claim to be the sort of all-seeing eye on this. Far from it. Okay, like yourself, I'm a trader. I'm trying to sort of assimilate all that kind of news and information, and then develop a trading plan for myself. That's really what the cut and thrust of it is. But as the slide says, all right, the US election of November 2020 was a fascinating roller coaster ride, which is yet to be formally completed, which we'll talk about in a moment. Most importantly for us as traders, how did it affect markets, and are there any new trends emerging? Okay, we're traders after all. We're always looking to see where's the opportunity. And in this session, we will take a look at the ongoing aftermath of the election and look at markets' reaction to that, and whether there's anything we can take away from that to help guide us and use in our own particular trading. And so what we'll do is, I've got some slides here, but then, if there's time, what we'll do is flip across to the live chart so we can actually see what's going on as we speak today. So stay with us till the end, because I appreciate people always get a lot more when they can actually connect the views that we talk about in the slides with what we're actually seeing live on the markets today. So right, where do we start? Where should we start? Well, let's start at the beginning, shall we? That's always normally a pretty good place to start. So we know that the election was held on Tuesday, 3rd of November, 2020. So we're about 5 weeks on from there. Okay, as I pronounce this, 5-6 weeks on. That election takes place every 4 years, and it was the 59th election. Okay, that's all fine. What we also knew is that the results started to fill in from the kind of the fourth, the next day, and in there in small scale are still ongoing, right? In the sense that there has been some a fair degree of shenanigans, okay, by both parties going on with regards to the actual votes and results that have come in. We now know that COVID-19 had some impact. That shouldn't really be a shock to people, okay? We knew it was going to have an impact, and it has an impact on the election and also an impact on how the markets have reacted since then. But we will come to that later. And what we're seeing from the kind of first bits of intel that are coming out is that Biden's apparent victory came off the back of postal votes, and this is now set the stage for the ongoing recriminations from the Trump team as they believe massive fraud was conducted. So, there has been an ongoing spat, an ongoing kind of legal battle, really, with a lot of to and the fro there. And listen, we're traders, we're not lawyers, okay? I don't offer legal counsel here, okay? We're traders, all right? So what we're really interested in is, we know this goes on, we're more interested, well, how does that impact the markets? Just to remember, and this is probably important for today when I'm actually delivering this, is that the winner is not the person who wins the most votes, but the person who wins the number of electoral college votes. Okay, there were 538 available, and the winner needed to collect 270. So I appreciate that some people may not have understood this or may not really recognize the value and the significance of this. In the US election, it is not the person who wins the most popular votes, okay, who gains the most vote, the popular vote, that wins. What actually happened is that the country, the states, are broken down into electoral college votes. I think it's based on kind of population, all right? So and it's those that kind of those electoral college votes that actually they will be meeting, and it's actually today they'll be meeting, and they will be making their choice as to who will be the next US president. So it's kind of a weird thing. You're not actually necessarily voting directly for Trump or Biden. The people were voting for their electoral college, and that becomes quite that can become unique. But we'll talk about that in a few slides' time. But all you need to know was there was 538 of these votes available, and the winner needed to collect 270. And the belief is that Mr. Biden and his team won that 270. So, as I said, that electoral college vote, they actually meet today, the 14th of December, as we do this to look at that. Okay, and there are some interesting stats that we know so far, and of course, with the amount of people who are, hundreds of millions of people voting, okay, the kind of data it will probably take a long time to sift through. But there were a few themes that were of interest to us straight away, okay, and it just gives us an insight into the US, okay, the views, and of course then that has a knock-on impact into things like policy and also the way markets and investments. So, but judging on what the numbers we've seen, Biden gained the most popular votes of any incoming US president-elect. Okay, so even more so than Mr. Obama, okay, and Mr. Clinton, etc. He gained the most popular votes of any incoming US president, which is kind of interesting. But equally, despite losing, Trump collected actually more votes than he did in 2016, which is kind of curious, the sort of curiosity of it. And also Mr. Trump, for how the media portrays him, there was an increase in votes from the kind of POC and Hispanic community, which is kind of, once again, this is all interesting insight to the demographics and the understanding of the kind of underlying sentiment within the United States. The media and the Democrats expected what they were calling a blue wave of voting. Okay, namely that that Mr. Biden would effectively wipe away the Republicans, Mr. Trump, etc. And that didn't occur. Okay, that didn't occur. Based on the numbers we've seen, it was a victory for Mr. Biden, but it wasn't a convincing sort of victory that he and his team and the media had been led to believe. And that kind of carries on. That kind of has a longer impact on us, because whether you love him or loathe him, all right, Trumpism is here to stay. Okay, I think the Democrats thought that this would be a washing away of that but it didn't happen. Okay, and as you say, whether you love him or loathe him, he's a his style is here to stay, simply because he collected more votes than he did in 2016. So it's sometimes I appreciate I'm doing this from the UK, we're in Europe, okay, and and of course we're not in the middle of the US, so we all have different views based upon the kind of the pictures and the image that we are fed from the media to understand exactly how how the kind of sentiment is playing out in the US. So I think it's always fascinating to understand these kind of little kind of tidbits of intelligence that just give you a little bit more depth of thinking about, well, right, what actually did go on in the US, what is happening, what are the people thinking, because remember that has an impact into how companies operate, how companies conduct themselves, and also about how people invest in those in the country, and that we will look at a little bit later. So that's a little bit on the on the kind of the political element of it. But what we also want to see is, well, how did it affect the major markets? Okay, that's other traders. That's what we want to look at. So remember, okay, we wanted to talk about how does it affect the US dollar. All right, that is probably the most how would you describe it? The most immediate impact that most of us as traders, or most of us from a global audience, that would be the kind of our first kind of one of our first and most important, so let's say, touch points, okay, in terms of the election and the US in general, basically the US dollar, okay, whether we trade in it, okay, whether we're using it for travel, holidays, whether we're investing, etc. We always want to have an understanding of how's it affected the US dollar? What's the impact? And you have to remember, okay, that the US dollar is the reserve currency of the world, based on it being the largest economy in the world. And you also have to remember that commodities are priced in US dollar, okay, soft and hard commodities. All right. So invariably, not only just as speculators operating in markets, you have to recognize that actual international trade, the US dollar is crucially important, and it's probably beyond the sort of kind of remit of today's session, but that has huge impact when you look at as I said, like commodity markets, and also kind of euro dollar, all right, which is not the euro USD exchange rate, but a different instrument altogether. So the important thing is you have to realize, and I appreciate for new traders joining, is that the US dollar, it's the granddaddy, okay, and you'll find all countries need to hold US dollar in order to facilitate those commodity purchases and other global trades. That's what it is. It is a version of the oil that basically makes international trade happen. And in the FX world, over 50% of FX trades involve the US dollar, all right? Hence why it becomes crucially important, okay? You just want to understand that. We understand how is that going to impact, okay, the election, going to impact the US dollar, because it will have an impact upon how we conduct ourselves as traders. So, as it says there, US elections are keenly watched to see what, if any, impact they had on FX markets and the US dollar in particular. And we'll take a look at the live US dollar charts in a moment, okay, later on. But we've got a few more interesting sort of pieces to discuss beforehand. So this is what we have here. Is this is the US dollar index, okay, the Dixie, and this is it's a daily chart. And what we here, let's just bring up the old drawing tool here, shall we? Just to always, I think that always helps us, doesn't it? Just to have a look and draw. And as always, okay, as I say, ladies and gentlemen, thank you, Vincenzo. Yeah, it's very nice to see you here. As always, ladies and gentlemen, I just caveat with the fact that I'm a better trader than I'm an artist. So please forgive my scribbles on the charts, but hopefully you'll get the gist of what I'm talking about. So daily chart here, okay? So, for those who are new to trading, okay, when we see these, okay, these vertical lines, so what's that showing us? That's just showing us each month, okay? So, we've had, you can see here, this was August, okay, September, as I said, remember what I said, that's October, and then we went into November, and here we are into December, okay? So there you go, the word of Jason, okay, D. So, those of you who've joined us, or joined us on Traders Yard, okay, and we've put up some posts about that, or me or my colleagues have talked about it. what we saw was, you can see for yourself, okay, after initially we had a spike up in the dollar for COVID, and then as you can see, the dollar fell away, okay, which, for many parts suited Mr. Trump, suited the American economy, because it would deem to make American exports cheaper. But what we saw was, we had this kind of level here, 92, which was, the first time it came down at the sort of end of August, start of September. We bounced quite strongly off it. We came back down towards it in October. But, you can see, having been in a bit of a block, well, hopefully you can see that that's actually, this is where we actually occurred. All right. So we had basically, this was around about here. This would have been the kind of US election there. And you can see there was, those couple of days, there was a little bit of volatility, not unsurprising. But since that time, we've effectively just literally been in a downtrend since then. So, we popped up, we were above 94, about 94.30. We came back down to 92. But you can see for yourself that actually we've dropped away. And, and as I speak here, okay, we're trading around about 90.50. And what we'll do is we'll look at the light chart in a moment, okay, to understand, okay, where that fits into a kind of a bigger picture. But you can see hopefully for yourself there that basically, since the election, we have just seen a sell-off in the US dollar. All right. Now, is that because Mr. Biden has been elected? Okay, is that kind of an influx of a lack of what's the word? A lack of confidence in Mr. Biden and Miss Harris? We shall see. There might be other outlets in play, and we'll look at that in the next couple of moments. There, apologies, a bit of a hiccup there. So, but hopefully you can see there. The dollar has weakened considerably, okay, since the 2nd and 3rd of November. What we also talked about, because we did a session probably about 2 months ago, maybe nearly, about running into the US election, and this is a post-election. We discussed taking a look at the US dollar Chinese Yuan chart. Okay, instead, if you wanted to get a little bit of an insight into where the election might be going, and as we see, President Trump and President Xi, okay, they have been in long, drawn-out trade talks or battles. Okay, we had the kind of stage one, which was signed earlier this year, I think back in January, and effectively there had been talks about a second stage, but with Mr. Trump's diminishing, that's probably unlikely to happen. And what we saw there, and we spoke about is the Chinese would prefer Biden wins because he'll be easy on China, and a Biden win will increase the yuan in strength at US dollar cost, which is what is being priced into at the moment, and that's what we'll look at. And what was interesting, okay, what I picked up on was after the media announcement of the Biden's win, China came out and made a comment, and they basically they congratulated Mr. Biden on his victory, and also pretty much the next comment was that they were demanding a renegotiation of the trade talks that they'd held with Mr. Trump. That in itself should tell you exactly how happy they were with the trade talks that they'd had with Mr. Trump. Okay, that effectively the first thing they want to do is renegotiate that. Okay, that tells me that perhaps Mr. Trump had them on the back foot. He was holding their feet to the fire, so to speak. They know that the Chinese know that Biden will be easy, okay, on the one. What will effectively probably happen is Biden will probably talk tough, but he'll probably allow China to go back to how they operated during the sort of times of the Obama presidency. And this is, kind of reflected here on the US dollar Chinese Yuan chart, which is a tradable product here on the Admiral markets. This is a monthly chart here. Okay, it's a monthly chart, so every candle is a month of worth of price action. And I've been talking about this on Traders Yard and my clients, etc., about looking at how during this we've seen what we had here was actually a very big double top here. Okay, real big double top M pattern formation there. Okay, just above 7, it basically couldn't get up and hold above it, and you can see for yourself. Okay, you can see for yourself what the kind of price action has been like pretty much all year. Okay, and what we've seen is a kind of a collapse in the sort of US dollar price against the Chinese yuan. So we've seen dollar weakening, Chinese yuan strengthening. Okay, and historically that's not necessarily been how that's not necessarily been exactly certainly how the Chinese want it. The Chinese want the Chinese yuan to effectively be much cheaper. They've kind of kept it sort of almost sort of in a very tight range. The idea being that they wanted Chinese exports to be much cheaper, and of course the Americans to buy considerably more of them. That is actually that's now changing. Okay, so the kind of it's starting to make the kind of dollar exports a little bit cheaper, and the Chinese yuan exports a little bit more expensive. Although there is a massive imbalance between how much China and America trade with each other. But as part of those trade talks and negotiations, one of the elements was that China would agree to buy much more of the agricultural products from the US, and actually in that sense, that actually puts them in a strong position. If there is a strengthening Chinese yuan against the dollar, that actually puts China in a strong position in terms of buying more of that kind of American soft commodities. Okay, and so as I said earlier, commodities are priced in dollars. So if the dollar's weakening and the Chinese yuan is strengthening there, that basically what China will lose on, let's say, exports, they will actually gain an ability, their purchasing power in terms of buying American agricultural exports, which would be said, you'd probably say would actually would have suited Mr. Trump or Mr. Biden, and actually most certainly American farmers. That might actually work better for them. But as I said, that is that chart there, as you can see there, that's just been one-way traffic for about the last 7-8 months there. Okay, and that's kind of given us a strong indication of what's been going on, and how the kind of the run up to the election and to COVID, and actually how that is having an impact on the kind of great power battle between both the US and China. So we've talked there about about how the elections come about, what will happen certainly today. Had a little talk about how we look at the impact it would have had on the US dollar, and also sort of other currencies, okay, itself, in terms of like the Chinese yuan. But what we've seen, and what has probably skewed, okay, the view is that, of course, as this has gone on, we of course have still been fighting the battle against COVID, trying to suppress it, trying to eliminate it. And actually, what I think has probably made the biggest difference to post-election markets has been the announcement of COVID-19 vaccines. Okay, we've seen the ones from Pfizer, we've seen ones from Moderna, and from other pharmaceutical giants. That, I think, has had a huge impact on equity markets. Okay, that has had a huge impact, perhaps even more so than the actual election. And the reason being is that, of course, as that vaccines, the announcement of those vaccines came out, well, it gave people hope. Okay, it gave people hope that we would be returning to a kind of into the world that we used to sort of enjoy, and that what would happen is that there'd be more travel, there would be more business, there would be a creation of demand. Okay, people would be out spending, traveling, etc. That all creates demand. Demand is good for equity markets, isn't it? So we saw a huge impact on equity markets. And when we switch across to the charts, we'll look through that and take a look at that. And what we also saw was that, we saw a bit of a switch from those online and tech stocks, which had done amazingly well during the COVID lockdown. Okay, and I think we've covered them. Certainly me and my colleagues, Marcus and Jens, have covered them, okay, in either various sessions or on Traders Yard. And what they saw was a little bit of a shift, a reorientation away from online and tech towards some of those old world bricks and mortar companies. So some of the things like banks, okay, the financial sector, some of the airlines, okay, the aviation sector in total, which I think we talked about a couple of weeks ago. And what this was allied with a drop in gold, all right? And this is interesting. I think I've got a chart in a couple of slides time we can take a look at that basically will sort of just give you a bit of an idea and a hint at that. We also saw a surge in Bitcoin as well, and Bitcoin has surged its way back up to recent highs, okay, recent all-time highs, okay, which is astounding, really, in terms of how that has occurred. And also, we've been bullish in oil, which might actually seem to be quite confusing, but we will look at that in the chart. But why would that be confusing? Well, Mr. Biden was anti-fracking and post. He was in favor of a kind of a clean energy New Deal, okay, sort of switching across to electric cars, etc. and different oil, different sort of energy, creation, which you would think that, seen as he was one, to see, a surge in oil, which we'll look at, seems a little bit strange. But that is actually, I think, more to do with as the vaccines have come out, it's that understanding that demand is returning, okay, or they're hoping that demand returns. I still think 2021 personally will be a tough year, okay, as I think even with vaccines there will still be lockdowns, there will still be some element of suppression. People won't be traveling as much as we were, even 12 months ago, and that will have a knock-on impact on markets, okay, and business. But it will be, it's seen as kind of we've turned the super tanker, right? We're pointing in the right direction, and that's where we're going. And that demand has filtered through into a sort of a reflection in the oil price, which we'll look at in a moment. So this is a chart. It's a chart I took from somewhere else, but it just gives you a very quick, all right, and a very sharp, okay, insight into how that vaccine, okay, and the announcement of that vaccine, how that actually had the impact that had on the relative sort of online tech, and also the kind of, let's say, old school kind of bricks and mortar. You can see there Zoom Video Communications in blue, which has been a darling, all right, of the stock market during lockdown. Okay, it's this session itself here is on Zoom. It's look at the share price, which we've touched on in the past. That's had a fantastic move, whereas most of the airlines got absolutely shredded, okay, during thing, because they're effectively grounded. They're not carrying anywhere, still got overheads, but they've got no revenues at all. And you can see for yourself, the kind of November 9th, when there was the announcement of the vaccine, you can see how quickly that sort of changed the share price there. That's just quite amazing, the kind of the flick in there, okay. Zoom, the price collapsed on that day. Delta Airlines and most of the other airlines, okay, they bumped, okay, on that day as well. So that has been a fascinating insight, and I think it has skewed markets somewhat from just being a pure view on, let's say, price action off the back of the US election. Okay, I think personally, the announcement of the vaccines has had a much bigger impact on markets itself. And here's another chart, okay, that I wanted to include just to sort of filter through. We just touched on a little bit about oil and energy. This is just a simple chart here, and what I've got here in the candlesticks is actually what they call XLE, which is an ETF which just deals with the energy sector. Okay, and the blue solid line is the price of gold. Okay, is the price of gold, and this is a weekly chart, and let's bring up the old tools here. We can see here, there's not really, okay, running through 2018, 2019, okay, we were in a range, okay, not really much going on there between them, but we started to see a little bit of those you remember, we did start to see a bit of a maneuver in terms of an increase in price of gold, and as you can see for yourself, XLE was drifting down itself. The kind of, not surprisingly, as we've discussed there, they've had the kind of, let's call it the COVID crash, which gave us a little bit of a spike in gold, not as much as you'd think. People might have thought, well, there'd be an immediate reaction pump into gold, but not necessarily. Why is that? Well, because when you have a crash like that, people are just trying to people just want to keep liquid, all right? So invariably, they don't want to get margin called. So invariably, they're closing all of their positions. So even though gold, they might have a profitable gold position, a big institution might have to close that just to be able to sort of meet other either remittances, margin calls, etc. So just to keep in business. So yes, there was a little bit of bump in gold, but it wasn't as big as people were expecting, precisely by that. But once the kind of initial crash was over and people started to sort of understand what was going on, what was happening, we started to see some of the stimulus packages. Well, what we can see was that we can see that gold shot up there, and we've covered gold prices before. We'll have a little look at them again, and there was a little bit of a tepid move, okay, but then we've drifted back down into this double bottom. But what we saw, okay, over the last month or so was invariably, you can see there for yourself, okay, is that invariably gold prices drifted down. All right, if we've got the time, we'll have a look at the gold price. But what we've also seen here is, XLE over the last, remember this is the last 6 weeks or so, the energy price, okay, the price of XLE and energy in particular has bumped up. Remember, we were talking about just briefly about oil price. So invariably, it's been this kind of, correlation, intermarket relationship between energy and gold. Okay, so as the as the COVID numbers increased and lockdowns increased, energy prices dropped, gold started to rise. But actually, since the vaccine, okay, gold had been used as a hedge. Well, what we've seen is, the kind of vaccines are starting to come out, and I think we had the first vaccinations in the UK last week. I think the first vaccinations in the US are happening today as I speak, and I'm sure even in your own countries they're being rolled out. I think the UAE, I understand, is rolling out today. As that has happened, then what we see here is this relationship, right? As there's been demand for energy, the gold hedges have been taken away. The profit people have taken their profits, and so looking at that kind of relationship between gold and energy is kind of an interesting one for us to see how well the world and global markets is doing with managing the kind of COVID situation. If we immediately start to see a spike up in gold and a collapse down in energy prices, well, we know it's not going as well as we'd hope. All right, and things aren't as great as we'd like. But what you would hope is that the longer term trend at this moment, based on this and based on COVID, is that energy prices will nudge their way higher, and gold prices might nudge their way lower, based upon that. So hopefully that's just a little bit of a different chart from the normal that we look at, just to give you a little bit of insight, give you some food for thought about actually how what has occurred and how we could use that in our own trade ideas. So in conclusion, ladies and gentlemen, not unsurprisingly, the US election promised to be one of the most tight and bloody election campaigns, and I think it's fair to say it has been, and I wouldn't say it's particularly over. Maybe this afternoon that might change. And in that case, it's certainly delivered. Okay, it generated quite a lot of volatility in financial markets, which we can look at, and we have, as we speak, we've not had official confirmation of a Biden victory, but that might merely just be a couple of hours away. All right, so if you're watching this in the next couple of days, that might be what's already occurred. As I said, we expect that to occur, but one of the things that we did need to recognize is that why maybe the bump right after the election wasn't as big as people expected is Biden's inability to do that complete blue wave sweep of the Congress, Senate, and House of Representatives. It will cause him problems. Okay, he doesn't have the stranglehold on the legislature sections of the US government that he was hoping for, which would allow him to basically drive forward his own particular agenda. The Republicans still have hold of the great parts of the let's say of the kind of the political map, which kind of means that he's probably going to be a little bit of a lamed up president, unless he can actually find a way to make the Bradlock. And we've not really even spoken today about Mr. Biden's health history. Okay, despite protests opposite, it's probably clear to everybody to see that he's not the most healthy of individuals. Okay, and that starts to weigh on markets, as in actually will he be able to do a full term? Will he not? Will there be some sort of transition plan across to Kamala Harris? If what happens there, that will have a huge impact. So what we'll see is, I think there will be there's been a little bit of bump because there's just a relief rally. Okay, there's a relief rally based on that there is a result. Okay, the next big drop will be, well, how long will Mr. Biden serve for? What will happen in terms of transition? How massively will his policy change? That is what will weigh on markets until we start to see kind of policy decisions come forth. And as I said, the kind of picture in terms of the markets, it's been skewed by that COVID-19 vaccine announcement, okay, which is fantastic news, and is an amazing piece of humans coming together to deliver a solution in a short space of time to address what was a real global problem, and that has actually had an impact on the charts, as we've just seen there. So why don't we take a look at some live charts? And we've got about 10 minutes or so left. Why don't we have a little look at live charts, see how they're playing out, how they're how they've been affected, and give us a little bit of insight into what we might see over the next coming kind of days, weeks, and months. As always, if you want to know more, you can join the exclusive Trading Spotlight community. I'll be in there for the rest of the afternoon. Okay, we appreciate that as traders. It's good for you to have additional support. Okay, and you'll find my colleagues Marcus and Jens, they put in some great stuff there, and you're very welcome to join us. Okay, and you can find us there tradersyard.com/group/312. As I said, I'll be there this afternoon. And if you've got questions about this or other things, we'll be very happy to help support you. But don't forget to join us next time. Okay, well, when we see on Wednesday, my colleague Marcus is going to talk about learning the importance of investment strategies to learn even before trading, including strategy 1, value investing, strategy 2, growth investing, strategy 3, momentum investing, strategy 4, dollar cost averaging. And that's going to be on Wednesday, 16th of December, 2 o'clock London time. Okay, check your inbox for the webinar link or head over to the Admiral Markets website to register. And as always, you'll find there's lots of analysis and education and resources on the admiralmarkets.com website. And if you want to contact us, you can do so. Okay, email there, global@admiralmarkets.com, or watch this session or previous sessions on youtube.com/admiralmarkets, and also on facebook.com/admiralmarketsglobal. So I hope you found that useful, ladies and gentlemen. Give you just a little bit of a look at what has happened, what's occurred, and the impact that has had upon markets. We are traders after all, and where we might see possible sort of possible kind of new trends emerge as we see the kind of confirmation and the move forward in terms of what will happen with this next US presidency. So if you'll just bear with us a moment, we'll switch across the charts and we'll have a little look at the live charts. Just bear with us a moment. Super. So hopefully you can still all hear me. Hope that you can all see me. Okay. Hopefully that you can all sort of see the charts as well. If you can do, just let us know. That would be fantastic. And here I am. I'm on I have here. This is Admiral Markets MetaTrader 4 platform. This is I have a profile here for the US dollar, not unsurprisingly, and we can see here what I've got here in terms of Aussie dollar, pound against dollar, euro against dollar, dollar against Swiss franc, dollar against Japanese yen, dollar against Canadian dollar, Kiwi dollar, and then also the US dollar index. And let's have a look at this. As I said, we'll have a little look at here on the weekly chart. Okay, in fact, let's go look at the monthly chart, shall we? So this is the monthly chart. Now, what's kind of curious is that after Mr. Trump's election, okay, we saw we had a bit of a bump there initially. In the first couple of months, we had a bump followed there by a big bearish engulfing candle. Let's zoom in on here a little bit, shall we? Okay, let's zoom in here a little bit. We had a big sort of bearish engulfing candle, and then for the first year of his presidency, you can see that the dollar weakened its way, and it went down to 92 and below. We were down to about 88. Okay, before we had a kind of driven our way up. You can see there the kind of the madness of COVID. Okay, the COVID crash, but then prices drifted down back to 92, and as you can see now, remember this is a monthly chart, so that candle hasn't completed yet. Okay, but you can see what's happened in the time since Mr. Biden's win. We can see that price has drifted down, and you'd have to be expecting that price would actually sort of come back down towards this area around about I think 90 is a big round number. We'll start to drift our way down there. Go down to the weekly chart and zoom out a little bit. Move this. You can see for yourself, okay. Hopefully, just make this a little bit. Hopefully, you can see for yourself there that there was clearly a lot of. Let's just put in this just to make it a little bit easier for you to see. You can see that we had a great deal of real kind of price action there. Okay, we can see price really sort of bounced around there, kind of between around about 90, what's that, about 90.40 and 88.50. Okay, and so it would not surprise me if price came back into that kind of zone there. And what will be interesting to see is, well, actually, how does price react there? Okay, so what we could see is that price comes into here, comes back up to that 92 area and carries on down. Okay, that's particular. That's as plausible as anything else, or maybe, maybe we see that basically price bounces here and then rallies up there. Okay, it's so, my view is, I always like to sort of see, identify areas where there are inflection points where the market has to make a decision. And so at the moment, I would see that this area, this zone here, okay, from all this price action previously, is going to be an area back up around 92, and then you'd be looking at back up around about 95. Okay, so that would be that's where I'd be looking at a kind of, where does the market have to make a decision? Where does it have to, make up its mind about what it wants to particularly do? What we've seen here recently is, and I talk about this. This is kind of let's just zoom in a little bit. What I talk about is that you know you can see the dollar has been short from 100, okay, from 100, all right, up earlier in the year, and it's been pretty much in a short trend, and a very nice short trend indeed. But what you do is he realizes that every man and his dog is short the US dollar at the moment. Everybody, this is a very clear, obvious trade. Every man and his dog has been short the US dollar. Okay, and if there isn't, that continues as long as there's people ready to sell. But the question is, are there many of the institutions who are already loaded up? And one piece of advice I was given right at the start of my trading career from a very experienced trader was that if you're not sure which way a market will move, well then just think, where would this market need to move to cause the most people the most pain? Because that's probably likely where it's likely to go. So of course, if every man and his dog is short, well then you'd be thinking, well actually everyone's short. Well then actually the market could rally. That would be what would cause all those short people in pain to cover their positions. And once you start getting a few people covering their shorts, well then that just carries on. And then what do you know? We have a switch around. Okay, so it's so it's kind of interesting to see. It's interesting to see that. Okay, and that's the dollar index, and then of course that has a knock-on impact on. If we look at the euro dollar, that has a knock-on impact there. Okay, so let's just move this around so we can talk about it. And remember, the dollar index is made up of how the dollar's trading against a basket of currencies, and it's made up about 57% of that is of the euro. So for those of you who are new to trading, it's not unsurprising to see the euro dollar and the dollar index, okay, is kind of inversely correlated in that way. And as we've seen, we've just looked at the dollar index as collapsing through prices. Well, what we've seen here is the euro dollar doing the opposite. Okay, we looked at. So we looked at when price was coming up here. Was price actually going to sort of just roll over? But a bit like the dollar index, it went sideways and then a real bullish candle, and price rallied its way up there. And you can see here, we broke that 120 level once again. It's kind of big round number, okay, and we're actually trading up there towards like 126 as we speak at the moment. So. You've got a little bit of euro strength, some of that based upon dollar weakness, all right, and some of that based upon the possibility and likelihood of a Brexit deal, a hope of a Brexit deal, okay, and the fact that I think last week there was a little bit of I say a little bit, there's I think a 500 billion euro stimulus deal. That's not a little bit of money, okay, but whether it's enough money to create the right stimulus, we shall wait and see. But it's a case of that has had that huge impact there, okay, and that's what we can look at. That's what we can look at and take a note of. If we have a little look at maybe we've got some indices on here, because that's kind of the interesting ones for us there. So here we go. Great. So I'm going to bring up, this is the NASDAQ, right? So this is the NASDAQ here. And you can see for yourself that it was in a fantastic trend, all right? Post-COVID, we've just been in a great trend there, okay? And you can see here, we had, this was the week at the start of November, then we actually had a real bounce there, okay? As it got a little bit of a relief rally from the post-election, and price has traded up, and it has actually closed at new highs, okay? If you look at this as a weekly chart, that's, a couple of weeks ago, we closed it at new highs. When I go down to the daily chart, though, that was I think that was the 9th of November when we had here, okay, into the 2nd, 3rd, 4th, we bounced up. Okay, on the election, then we had the COVID vaccine announcement, price drifted down. Price has drifted its way up, but last week we started to see it roll over again. So we had a little bump today, but what's kind of curious to me is that it has rallied to new highs, but it's not as strong as it was in the earlier in the year. And when I look at the Dow Jones, okay, and look at the Dow Jones, we can see the Dow Jones is really it's up above 30,000. Okay, it's ground its way up there to its highs, and that is an element of us seeing that some of the money kind of profit being taken from the Nasdaq and then being reinvested into kind of, let's say, Dow Jones. And if you take a look at the Russell chart, okay, the Russell chart, that is actually sort of will have a huge impact there. Okay, if you look at the Russell chart of the kind of broader depth of the, let's call it like Main Street companies in the US, that has actually had a fantastic one and continues to do so. And that's something we can take on board and look at. Let's have a quick look just to finish the last moment. I think have I got gold on here? I have. So here's the gold weekly chart. Just a little bit like what I was saying before, wasn't it? Just, this is the weekly chart. We've had a fantastic run, but, price started to go parabolic, started to go absolute vertical, which is normally the kind of telling you there's a bit of an end of a trend coming on. And then we can see price just fell down. And what we're looking at, okay, over the, I'm zooming here. What we're looking at is here, you can see for yourself there, the kind of the vaccine announcement, had a huge impact on gold, all right? And as we discussed, effectively it's energy and gold as we expect the world to return to some semblance of normality. Well, then invariably that big institutions will be taking off their gold hedges, and that money will be going into energy stocks. And you can see prices drifted all the way down there. Okay, hit the 200, and now it's up at the 50. And I see prices now being squeezed there between the 200 and the 50 period moving average. Price getting squeezed before it gets ready to make its next move. And I think a lot of that will have to do with the US dollar. Okay, it will have a lot to do with the kind of announcements that come with COVID numbers and COVID vaccines, and on also with that. So there you go, ladies and gentlemen. A little bit of a quick look at that. Okay, is that I hope that find that useful. Okay, hope you found that a little bit insightful. As always, okay, we wish you the very best of success with your own trading. If you want to join us on Traders Yard, you'll find I'm there this afternoon. I'm very happy to help you and answer your questions. And if not, remember my colleagues Marcus and Jens will be talking on Wednesday and Friday. And failing that, I shall see you next Monday. And until such time, trade well, ladies and gentlemen. Thanks.